The current global stock market sell-off, I think, is going to intensify. For some people who think that the days of correction which have happened are about to get over, I think they are quite misled. I think you're going to see a substantial correction in global stocks. The reason being that you are converting from a deflationary environment to an inflationary one. And whenever that happens, this in the backdrop of rising oil prices, you're bound to see correction in stock prices. Let us have a look at European yields. Now, you have noticed that European bond prices have been falling off late because of rising yields, that because of higher perceived inflation. This itself shows that as inflation starts creeping in into the global environment, you will start bond yields going up, and as a result of which, you will see even the stock markets coming down. I expect stock markets to correct substantially between now and the middle of July. They may be a little cooler in the month of June, but I believe the second half of May and the first half of July will be very gruesome for global stock markets. And you, as an investor, need to definitely position your investments accordingly. There are uncertainties in other parts of the world as well, which need to be taken into consideration. For example, the UK elections tomorrow. If the Tories win, it is normally supposed to be very bullish for stock markets, but here as well there is a rider. The rider being that in 2017 they are expecting to have a referendum on whether uh, Britain should remain a part of the European Union or should exit, which means there would be a lot of uncertainty leading up to 2017, and a lot of investment decisions therefore could get postponed in the bargain. As a result of this, you will find that the pound could get impacted, and the forex reserves also could get impacted in the process because of the delay in making investment decisions as to whether companies should remain in London or exit. There is the other part as well. The Labour Party, led by Ed Miliband, uh, have other austerity measures, and they have things like the mansion tax, which they could bring, which could have an impact on prices in central London should they come to power. Even otherwise, they would need the support of the Scottish National Party, and this would have its own impact because the Scottish National Party could then go ahead and have a referendum once again on Scotland. And should the independence take place, this could again bring about uncertainty in the British landscape. So there are lots of uncertainties in these areas as well. In India, the growth is not picking up to the extent that was envisaged by the new government led by Narendra Modi, and there is some disappointment which is starting to creep in, and that is impacting stock markets. This, coupled with the MAT, the minimum alternative tax on FIIs, foreign investors, is beginning to have its impact. I believe that the Indian stock markets, um, uh, which have risen by almost 30% over the last 1 year, and have are net negative for 2015, are going to get further impacted negatively, and you may see much more downside easily over the next 2 months. You could see another 10% downfall over here, but later on be positioned for a very sharp rise in Indian equities. So you may want to position yourself accordingly. Coming finally to the commodities like oil, copper, aluminum, I believe they are all going to be on an upward swing. There is a dichotomy between the fact that global growth is slowing and at the same time commodity prices are going to are beginning to go up once again. Whether this is sustainable, I think it is. Why? We will talk later. In the meanwhile, do keep these dates in mind when I expect the global stock markets to correct. I believe the global stock market correction is definitely going to intensify, and do not be in a hurry to buy stocks right away. Wait patiently, you'll get a better time and a better opportunity. Take care, happy investing. Bye bye.